3 lakh crore rupees. Yes, you heard it right. 3 lakh crore rupees is the amount of wealth that today's session wiped out from our markets, making it the biggest single-day loss ever in India, and the biggest culprit, like we told you, is the banking sector. Team CNBC TV18 gets you the leading trends from an earnings season that investors will want to forget.
The Lal Street is in turmoil, and that's an understatement. 500 of the companies listed on the Bombay Stock Exchange hit the lower circuit in a session that saw the most wealth being extinguished in a single day. And it's a dismal earnings season that has investors terrified. So far, nearly 45 companies that make up the Nifty have announced their earnings for the October-December quarter. And a closer look at the standalone profit and loss accounts for these 45 companies reveals that for the Nifty, earnings have declined on a year-on-year basis. A shock considering most investors and analysts had expected and were working with a modest growth number. Taken together, these 45 companies have seen net profit fall 5%, driven by a 3.35% fall in net sales. This despite EBITDA growing 7%. This fall in net sales has primarily been on account of energy companies, which lost out on revenues due to the sharp fall in global crude oil prices. But even that pain does not compare to what the banking sector, which makes up 30% of the Nifty, has thrown at the market. Thanks to an ongoing effort to clean up their books, earnings reports from banks have been largely bleak. For the 8 banks that make up the Nifty, top-line growth has come in at 9.2%, but net profit has dropped by an almost equal 9.58% year-on-year, thanks to a 45.8% jump in provisioning for bad loans. Remember, this number could still change since Bank of Baroda numbers are yet to hit the street. But even strong numbers from this bank will not erase the picture. On a quarter-on-quarter basis, top-line growth has remained flat for these 8 banks, while net profit has declined 21%. Let's take a step back and look at a broader index like the S&P BSE 500. 326 companies making up this index have announced their earnings so far, and cumulatively, these companies have recorded a 4% fall in net sales. Net profit came in just 1.8% higher, despite EBITDA rising 5%. Again, 26 of these 326 companies belong to the banking sector, and that explains a lot of the struggle. Experts agree that this situation may not improve significantly for the next 2 to 3 quarters, especially because the economy is not recovering any faster, and banks will continue to clean up their books to meet RBI Governor Raghuram Rajan's tough March 2017 deadline. In Mumbai, with Sajeet, Manghat, Surabhi, Upadhyay.
Some serious pain there for traders.